Hello, hi. I just want to share a bit about this recession, whereby the Fed, because of may raise interest rates for the sole purpose of reduce demand, global demand, and America consumer discretionary demand, so that prices of things actually generally goes down, and then also there could be just general fear in the market, which is the second point, whereby because of the Ukraine war, and the possible of Taiwan China war as well, people may start to spend less. And if this consumer behavior naturally happens without the need for Fed intervention, I think it's actually good for the stock market. Then the next question is, if the rising inflation in 2022, this time round, as I said, may not be due to supply chain crisis anymore. That was a 2021 issue. It could be due to spiraling wages outpacing uh, the inflation in the in cost of items. Even the items are more expensive, but people have more salary, they can buy. And also um, could be because of the Ukraine Russia crisis that causes oil and natural gas to go up. So just share with you this particular video about recession that may happen if inflation were to be persistent.
Watches all of my videos. But this is a reminder about what happens to the stock market during a recession, which some people think is going to happen at some point. Now, most people think recession means, people are about to lose money in the stock market. But that is not always what happens. A recession is not the same as a bear market. In other words, you can have a recession where the economy shrinks, but the stock market still makes money for people. It's completely counterintuitive. This is directly from Russell Investments research. Between 1869 to 2018, we've had roughly 30 recessions. Now, of those 30, 16 of them had a positive stock market return with an average return of 9.8%, even though the GDP, in other words, the economy, shrank on average 3%. So it doesn't make sense, but sometimes that's what happens. The other 14 recessions where the stock market went down, those lasted an average of 18 months with an average loss of 14.2%. Now, this just means that if you were to try to time the market when there's a recession, it's a 50-50 chance. It's like flipping a coin, and maybe you'll make money, but maybe you won't. But one thing is true. If you sell everything and you withdraw your money out of the market, you will lower your chances of making money. In other words, you will increase your chances of losing money because it becomes that much more difficult to time the market at its highest, because then you have to time the market buying back in, which is the second time, and that is almost impossible to do. Which is why, for me, I'm not going to try to time the market, and I'm still going to stay invested. As usual, have a wonderful rest of your days.
So if you look at this, right, it's so difficult to time the market. 30 recessions that has happened in history, it's a 50-50 chance. So also bear in mind, a recession, if due to increased non-stop inflation, um, doesn't necessarily means that it is a bear market. So take note, yeah. So okay, take care. See you on Monday.